Gentlemen, this is Brad Matheny. This is a quick little update. Today's the 13th of December. I wanted to highlight here how the markets have really rolled. This is my chart from earlier. I highlighted the potential rolling of the S&P and the NASDAQ today. NASDAQ is still up. S&P is down. But I want you to focus on this real roll in the spider sectors. So you remember I highlighted a potential role in the markets with my anomaly event prediction. These are my anomaly charts highlighting the QQQ potential to move down into this 460, 470 area still. And we had the SPY potentially moving down into the 570, 565 area. We had the XLB potentially moving down into the 90 to 91 area. And take a look at these. XLB is at 89. Okay. We're already down here in this anomaly low on some of these sectors. Let's go through some of the others. So XLC had the ability to move down to 88 or the ability to move up to call it 97, 98. XLC is at 101, pushed much higher, all the way up into this area. XLE, energy, suspected to move down potentially to 80 to 82, maybe 84, with also a range maybe up into the 90 area. So 98, 97, 96. XLE's at 89.15. Okay, 89.15, right here in the 90 area. Okay, big move down recently and possibly going to break down into this early January timeframe. XLF is breaking downward a little bit today at 49.49. That puts us down in this area, still high. We had the potential to maybe move down to 42. So we could be looking at a pretty good breakdown here for the financial sector. XLI is currently trading at 137.69. That's right here in this middle area, way off the lows. We'll go through the charts here in a minute, but XLI potentially could move down to 124, 126, 128. We have XLK. Technology is higher. Obviously, technology's on a roll. Where's XLK? There we go. 238.07. That's right up in this area. Upper range, 238.07. Still have a potential to move down here to the 214, 215 area. So that would be a pretty substantial rollover. XLP, consumer staples, moving higher, 82.24, 82.24, right up in this area. Again, higher, but not really up above these previous highs. And again, could potentially move down into the 76, 77, 78 area if my anomaly event plays out. XLRE moving downward, 42.97. 42.97 is down here in this lower area. We do have this potential, believe it or not, for like 35, 36, 37. And that would be, maybe right over in this area by the end of the year, 39, 40, 41. We're not that far off. We're only a couple dollars off from that level. It'd be interesting to see if we got down here to this 36 level. Then XLU is the last one at 77, 71 or 75. 77, 75 is down here in this lower level. XLU should be really, basing and bottoming here, moving up into the end of the year. So you got some real opportunity here. You got to just play what's in front of you. And again, we're looking to see how this plays out. We're looking for more movement. Oh, here's the last one, XLV, 140.78, 140.74, right about where we were. XLV is probably pretty close to a base and a bottom over here. 140, XLV 140, actually we're down here. 140.79. Yeah, we're down in this area. XLV has really pulled back considerably. Wait for the base, wait for the bottom. Let's see, we have another XLY. XLY 234.22, way up. XLY consumer discretionary is way up. I mean, this has been a skyrocketing move in XLY. And yep, that's it. That goes back to the data. Now, the original data that I shared was this. This was the original data highlighting the December 1st potential targets, the January 1st potential targets. Now, remember, the January 1st potential targets show the potential deepest decline. So we could be moving into some sort of a rollover type of trend coming into January. We will see. But ultimately, we've had some pretty solid moves. And like I said, taking a look at these, you look at the daily, S&P is down today. QQQ is up today compared to yesterday, but still down, rolling downward. XLE rolling down very hard right now. XLU moving down very hard, back at really pre-election levels. So the whole post-Trump rally has dissipated. Now we're getting into a real make or break type scenario for the markets. If we start to collapse here, we could get a big breakdown. XLK technology breaking down after seeing this fairly big rally phase, this consolidation. This was the election, remember, back over here. XLB, basic materials, getting crushed, just absolutely getting crushed. Okay. XLP, this is consumer staples, still elevated but moving downward. XLY, which is consumer discretionary, took off. Remember, here's the election, and it just rallied like mad. Now, this is interesting because consumer discretionary is, essentially showing an exuberant rally. Okay, we're showing an exuberant phase in the market where consumers went off and started spending after Trump, consider this a joyful spending spree, is apparently what it was. XLI industrials down pretty hard, about ready to fill this gap here. Very important to see here that we could be filling this gap, moving all the way down into this 133, 132 area. XLC communications peaking, had a good solid rally sector, now rolling downward. We'll see how this plays out, if this plays out. Beautiful evening star formation right up here. XLV, healthcare fund, breaking downward, bottoming, may find some support here, like I mentioned earlier, and trying to bottom, but we'll see. I mean, otherwise, we could see a bigger roll downward. And I think Trump's going to come in and really try to straighten out these issues, especially after the shooting of the CEO. I mean, let's face it, we healthcare's got to work in this country. And if the government is sponsoring healthcare, and paying into it to try to provide subsidies for people, these healthcare companies have to consider themselves, less for profit. Yeah, you can still make money, but let's be realistic. Your job is to serve people in need. So XLF, really kind of an island topping formation here. Let me come back over here and show you us this basically like this, head and shoulders potentially moving down. And I think we're going to move into this, moderate downward cycle phase here before the end of the year. But again, just this gap here, oops, really is impressive. So this is, again, if we come back over to like XL, where was it? XLP? Nope. Yeah, XLY, consumer discretionary. So here's the left shoulder, here's the head, here's the right shoulder, and a breakdown. Okay, it's an impressive move, really. The anomaly event here could still be playing out. Financial sector, got the same head and shoulders type formation closing in on this gap. And XLRE, we got the post-election right here, bit of a left shoulder, head, right shoulder, and maybe a breakdown. So you can kind of see this playing out. Here's the election, left shoulder, whoops, head coming down, right shoulder, and maybe a breakdown. XLU, same kind of thing. There's the election, left shoulder, head, right shoulder, breakdown. XLK, here's the election, left shoulder, head, right shoulder, maybe here, and then a breakdown. XLB, already broken. So where's the election? Back here, you can see here we've got this falling shape taking place already with basic materials. Likely to continue downward. XLP, there's the election, November 4th. Left shoulder, head, right shoulder, potential breakdown. XLY, same kind of a setup. XLI, same kind of a setup. Here's the election right here. So you come up here, left shoulder, head, right shoulder, breakdown. XLC, there's the election. Left shoulder, head, right shoulder, breakdown. Same thing here, XLV. We've got that continued downward trending. Okay, I mean, really, you can see it through here. Likely going to try to come down. So you can see how the sectors are really rolling and trending, but these head and shoulder formations like XLF here look very ominous. I mean, this looks very ominous for a potential breakdown or into end of the year or early into January. And, with everything that's going on, and with what's coming with Trump, and what's trying to take place in Washington, D.C., and the fact that we've had this, massive rally phase. Remember, this is daily, but since 2020, we've seen this big, massive rally phase. It would kind of make sense to me that, let me move this to weekly. It would kind of make sense to me that we're looking at, something along the lines of a rolling cycle pattern. So let me explain to what I'm thinking. So I'm thinking that we have this rollover left shoulder moving into a head formation here, possibly up into this area, into 20. Make sure I draw this right. Into 2025, rolling into a move here. Well, actually, it's gonna. Yeah, and this makes sense. So what we're really looking at is, I got to mark it here. So I can draw it efficiently. Something maybe like that, and maybe even a little higher than that. Pulling all the way out into 2030. Now, what we're looking at here is, an expanded kind of an A, B, C move here is what we're looking at. And we're looking at a little head and shoulders formation right here, which may end up basing and bottoming here. I think that 2025, for the most part, is going to roll upward. And then 2026, we're going to roll down. So when I'm drawing this and I'm trying to highlight the broader structure. I want you to understand that this is the broader structure. We're moving up into, I've already drawn it. We're moving up into this peaking pattern, which will be over here. So let me clear this. We're going to move up into a peaking pattern here in late 2025, down into a base, and then up into an ultimate peak here. Now, the actual formation here is going to be kind of interesting because we're going to get this rollover, and then we're going to get this rollover, and then we may get this forming into some kind of a base over here in 2026, 27, like kind of a head and shoulders formation. Then we will build likely a base off of here and roll back to the upside into the big expansion rally. And I think that's going to come in late 2026, early 2027. It's going to really start to accelerate. But intraday, okay, meaning forget about these multi-year cycles right now. What we're looking at is a head and shoulders potential recovery here that could put us easily back into this Fibonacci retracement area, back down into this 618 area easily. Okay. And so we need to be aware of that in the sense that this head and shoulder formation could wipe out. Remember, here's the election support, pre-election support. We could easily wipe that out, come all the way down here into lower levels, 44, 45, 46 on XLF before we try to find support. So I'm going to leave you back over here with this long-term chart, try to show you again what we're looking at and why you need to be prepared for an early 2025 base and bottom. It's playing out to be the anomaly event actually takes place very late in this year and early into January, maybe February, and then we roll into a rally phase, probably up, 15, 20% this year, and then we may roll into a deeper decline in 2026, 2027. Again, this is not a bottom, okay? In fact, I really do believe that this is going to actually end in 2026 and start to roll, because 2027 ends up being near peak upward momentum. So understand that we are peak, not peen. Okay, so the real setup here is 2027 equals peak upward momentum. And in my opinion, that means we're going to be ripping on up through 2027, 28 up to new highs. So that would put a bottom somewhere in 2026, possibly June, July, August, and that would put our peak somewhere near the end of 2025. So that means that we'd be looking at a peaking pattern right over here in September, October, November 2025, trying to get a rollover and then a base bottom here. And that's going to give us the real roll. So what we're looking at is a roll, a pause, a rally up to new highs, a rollover, a pause, and then into the rally phase. Okay, guys, there's going to be a ton of opportunity for you out here to try to find these things. And remember, I've got all kinds of tools and resources to help you. And the reason I'm sharing all this is because I want to try to teach you how to prepare for and execute these better trades. So remember, come check out my profile on TradingView. I'm here to help. I've got a ton of videos on my profile for you. In fact, let me come over here, get rid of my comments. Look at all these videos. Every day, sometimes 2 or 3 videos trying to show you what's going on. You could spend a month watching videos over here to try to figure out how to identify the best trade setups. Okay? All right, guys, that's it for now. I'm going to let you go.